All right, good evening, guys. Ken of Tortoise Capital, nightly strategy podcast for Friday night, June 30th, 2023. Let's get started with the swing portfolio. This is Alcoa. This is all on 30-minute charts. And yesterday's SSC, that's an SSC because it has lower lows, even though this has a COTA 2 feel for it. The fact that it failed once means it's no longer the easy COTA 2. So the COTA 2s, we always want to see that rising high. Simply means that the breakdown is just the first effort to defeat the previous upward trend. But when it's already put in a second lower low, then that bet is off, and now this really is a SSC. Now it's forming a COTA 2. So if we had gotten out here with a scratch, which is fine, then the re-entry here would be appropriate. And that's really the same trade. And so for that reason, I believe I should have taken the exit here this morning. I didn't. I was waiting to see this and then go short and was willing to take the 1 hour loss. But I think the better play would have been here. And then when I see this would have been to re-enter here on like a 1, 2, 3. And not later than a emerging dragon. Nevertheless, I stayed with Alcoa. Part of that was the big gap up in the S&P, and that was lifting all boats, and I felt relatively safe in a large cap like Alcoa. So bottom line is that we're holding this much gain against that much risk, and that's about +1, and I'm looking to see this continue next week. And if it gets above 34.50, then it's off to the races. And then the next targets to the upside, we simply facilitate our little price level across here. And this blue box is the 10-day high. So that has a clear pathway to increased gains. AI. So we started this at the close yesterday because it didn't fail and then it was working well, and the PSAR flipped, so we took that. And today it ran up almost to 39 and then started to fail, and I wanted to make bank and take +1. I still think there's a lot more room to the upside on this one because it's put in a nice base here, and but I wanted to get paid and reduce risk over the weekend, so +1. Caterpillar, no trade. Cliff, we closed now this is a COTA 2 entry, right? Because we have this, and then here was the PSAR flip, and that was the soonest we could get into it yesterday. It did this, and then today it gapped down a little bit and started to sell off, so we decided, you know what, let's take +3 and be done with it. +3. CVS, that was a 2-day SSC. So this is an SSC because we have this harsh sell-off. And remember, we interpret this big gap down as if that was a giant red candle. And then it was more pain and suffering. So that's as harsh winter as you want right there. It's well outside the Red River. Had stabilized, so that's a good time to initiate the SSC. It closed well yesterday. Today it continued to run up, and then it came through the dragon in the last half hour, and that was enough to say, let's capture +2 as it's running out of steam. And we've gotten most of everything that we could have wanted, which was, you know, this trade here is a replay of that trade there, and that's where it stabilized. So why not just take it while it was fun and be done? over the weekend. That's the idea. Keep it simple. Let's see, where was it? That was CVS. Yeah. Okay, so next one up is Dish. No trade, although there was legitimately a short side opportunity in here. That's certainly a tradable move. I just saw so much strength in the S&P that I got chased away from most of the short sides today, and I didn't want to hold any of that over the weekend. Devon Energy, we closed the 2-day COTA 2. Electronic Arts, we closed the 1-day SSC. Emerging Markets, no trade. Ethereum, no trade. Mexico, no trade. Brazil, no trade. That's one that got away. This was the indication yesterday was, and I was really tempted in here, and I just couldn't pull the trigger, and that missed a nice move and a reasonable follow through. That's one that got away. Intel. We tried the short on that one yesterday, on that collapsing dragon, and it started off well and then just kind of petered out. Didn't take the exit until today. It gapped up, so we ended up taking minus 0.5. This failure to fail, I think, should have been enough warning. However, what that is now telling me is that this is now setting up as a COTA 2, and I will be ready next week. And especially if it gets above the 5-day high, it then has a chance at 35 and 36.50. So I'm liking Intel on the long side next week. This is a COTA 2 in IP, International Paper. I really like this one. It's an industrial company, and it had a 1, 2, 3 flavor to it. So we just took that. Even before it gets through the dragon, you can already see the RL10 reversing, and the whole S&P was strong. So we took the fractional loss on this one, because we were long here, and then it gapped down to here, so we got out quick, and then watched it just resume. So re-enter. That's essentially the same trade, only this time I used a much smaller risk box and went with the PSAR flip, which means that was only 1/3 of the risk box compared to this one. So my position size was 3 times larger, and this thing took off and rewarded us with 4R intraday on a larger position size. And now it's testing this crucial level, and my spider sense is that this thing's going to work. That spider sense means nothing, but we are carrying that risk overnight, over the weekend. Took the gift in IYR. This was a COTA 2 and an emerging dragon, and it closed well yesterday. Today it gapped up to here and then rolled all the way back to here, and that was enough in order to cash +4. Now it kept selling off, and so I felt really smart until I saw it closed right back up in here, and I did not want to chase that one, but that one really shows that there is some resilience in the real estate, commercial and residential, and that has cleared this previous hump. So that whole thing is looking like a cup and handle twice, and I really think IYR should be on your short list to be ready to exploit next week. Regional banks, no trade. McDonald's, sweet. I talked about being in love with these guys here. Here's a COTA 2 and an emerging dragon, and that closed well yesterday, and all that did was gap up, and when it moved that far, I just felt I had to hold my nose and buy it, because it was already holding 6R from here. We put that one on, and it gained another 1, 2, 3, 4. So this one is at 14R, on 2 days in McDonald's, and it just cleared this, that thing is going to be a home run for next week. Um, that's just massive goodness, and it deserves taking a step out to look at this thing from a wider perspective. This is all-time highs in McDonald's. So this thing has zero resistance overhead, and look at the power of the harsh sell-off, and then Kata 2s, then another Kata 2, and now it's an emerging dragon and gone, and now it's cleared this peak. Dude, we have been saying you have to buy McDonald's. You still have to buy McDonald's and hold it forever and never sell it. As long as there are cheeseburgers, and cheeseburgers rule the world. McDonald's. Have I mentioned that I like McDonald's as a stock? Don't eat the food. Every cheeseburger you buy, you should be buying a share of stock instead. So Merck is in the same condition. This is all good. And here was today's trade in Merck. So yesterday, you will recall we held our nose early and bought the SSC and the PSAR breakout, and it closed well. And today it gapped up, so we added a second position and then a third position, and that thing closed very well. So we're holding 1, 2, 3, 4, 5 on the first one, 2 on the second one, 1 on the third one. So this is 8R in hand with 3 positions, and I believe this one is also at an all-time high. Not quite. It's got to get to 120. But boy, does that ever look good on a 3-day. Yep. And on a daily, it's going to look really good too. Yeah. So we still have a little bit of room to go on this one. Not quite as persuasive as McDonald's. This is the tactical region it has to get through. But if it gets above 120, and who's going to say it won't? You got a double bottom and strong buying. The sell-off terminated here. That gives you a Kata 2 at that PSAR flip. That's why you play that pattern, because it gives you all of the measurable professional space to earn money. And when this goes, this is where the beginning of irrational exuberance is. But you're deep in the money because you've been trading it properly and professionally. Microsoft. This was the emerging dragon gap up, which is almost like a Kata 2. But here's the emerging dragon because it's above this peak, and it gapped to here. So you can just buy it, have the standard risk box on it, and it's closing well. It's at +1, and it has cleared all of this. All of this resistance is gone, and now it's aiming back for 350. So this thing is going to go well next week as well. Marijuana, no trade. NVIDIA initiated the gap and go the same way as Microsoft, holding +0.5. Clean energy, no trade. Rivian, oh man, are you kidding me? I'm gonna draw a big red box here. I want you to I just want you to feel the beauty of Rivian. And why are we paying attention to Rivian? Because it's China, and it's the alternative to Tesla, and those two are fighting for, future domination of the world. So this whole red box has given us, and we even missed this one, but this one gave us about 10R, and that one gave us about 12, and this one, yesterday we got this entry just above 15 with a 25-cent risk and got a second and a third position in, and it closed well. And today it continued a fourth position, a fifth position, and when it did this, I just had to get out because I was holding 5 positions with 1, 2, 3, 4, 5, 6, 7, 8 on the first one, 6 on the second one, 4, 2, and a scratch. So that's 20R in 2 days on a stock that can also do this. And that's 20R here plus another 15 over there in 8 days. Why are we trading Rivian? Because it can get you 40R in 5 days. Now, what I want to do is, hopefully I save these. I want you, we're going to just step out and look at this on a, if we look at it on a daily chart, that 20R move was here, and the 15R move was there. So that red box was just this. That's not even an abnormal move in Rivian. It does that 1, 2, 3, 4. That's the 5th time it's done it in 4 months. Oh, and you like the downside? How about a move from 20 to 12? And it's got these moves to the downside. So why was I in a hurry to get out of this? Because I wanted to bank 20R and have no overnight risk. It gets a little gappy in both directions. So I'll just ring the bell after an exceptional move. And if we go back far enough, this thing hasn't even begun to recover from 40. And this collapse. And here's the target. The target is 20. And there's still $4. That's still a 25% move potential. And you can do whatever you want. I'm 65 years old, and I don't want overnight risk. I'll just keep harvesting the fish when they're running. When the fish are jumping in the boat, you do what you need to do. But that's how you frame them. That's how you trade them. You can roll some. Did I have to sell all 5? No. Could I have kept some? Yes. Your mileage may vary. I mean, Rivian, for crying out loud. Maybe it's the most important stock in the world. Maybe I might get that wrong. Now, how's that for a 30-minute, 15-day chart? That gets your attention. When you back that out further, that doesn't even look crazy. That just looks normal. So here's what that move looked like without our structure on it. When you add our structure, every one of those circles is a decision point. This little collapsing dragon is why we got into that. We said, hey, the size of that move could be the size of this move. It was to the penny. And when this fails to fail further, and when this is coming out of the Red River, we have a reason to go the other way. Here's confirmation when it enters the summer, and off it goes. It's been in the summer all the way until today. That's the reason I'm getting out, because it's actually starting to stall a little bit compared to the acceleration of the Red River. So as I read that, going into the weekend, it's coming to a turning point right here. And so I look at this and say, what a perfect way to end a perfect day and week. with 20R here and 15R there, and I don't know, 10R there. You know, I'll say again, if you're not trading the 30-minute charts, I don't know why. The S&P, here's that. This was the reason I was really favoring the long side today. There's your gap, and then there's your continuation, and that's a new 30-day high. And this is where that turning point occurs on the PSAR flip, right at the 10-day low. And when it does not fail and it goes into the summer, you can pick up a long side bias. Where? Right there. There's your long side bias. That's your follow through. Here was this, and then today's little move gave it another burst. Now, this is such an extraordinary move going into a weekend. People were willing to hold the U.S. on that with that kind of move, and it's taken this out. That thing has a chance to go crazy next week. Yeah, could it also come back to a 50% retracement? Sure. What's going to cause most people the most amount of pain? I don't know, but it's going to be a volatile market Monday and actually not Tuesday because it's the 4th of July. But wow, is this going to be fun next week? Tesla initiated the emerging dragon, holding a quarter of an hour. U.S. Steel initiated the COTA 2, and off we go. Let's see if I can find the sniper. Where is he? Is he over here? Here we are. Yeah, sniper trade of the day. So this is a pile on to Rivian. So I showed you those double-digit gains in Rivian. This is a larger position size, and I've only got the long side positions on here. And this is with a smaller risk. This is with a 15-cent risk instead of a 50-cent risk. So these positions are 3 times the size of the other ones. And that's about 5R in the usual way. And then this was where I decided to get out of that whole pile of the long swing trades. I just said, you know what? How much do you need? I don't know. I felt like that was a nice way to end the week. That's where the swing trade exit occurred. It gave me a nice reason to get out in here and said, you know what? Let's just take that and sleep well over the weekend. And then if it gaps up and goes, then I have a reason to be full of regret. Nothing wrong with that. Since we're talking Rivian, here's my brothers. Bill, you want to jump on and talk these? Oh no! Oh, he's.
Yeah, I'm coming.
Oh,
coming,
okay. All right. All right.
coming on.
Oh, I didn't see him.
So
Go ahead.
if I had loaded a chart last night because I got on late, but it was basically I put it out there. I had made about
Here's the one. Yeah, that's the previous one.
Yeah, so I started a first trade, and then my wife ran over a bunch of nails, so I had to go out and get $1,200 worth of car tires. So when I came back, I saw that it had gone up in 2-hour battle drill. Then used my put on another position, but then almost immediately got out because my rule for 3 positions is a 0.3 trailing stop. So it just automatically got me all out. Then right about 2:30, since it didn't fail and PSAR flip, when it turned just before it turned back to summer, I got another position and I ended up holding that overnight. Then we go to the next slide. Okay, so that was the 2R I was holding yesterday at the end of the day. You see the fall, summer, fall. So I was holding that. It gapped up in that. Now this is on 10-minute chart. In that, I went, oh, well, why not? It went up, retraced. I got my that's a half an R trailing stop for 2 positions, because that's the other part of my exit rules for the sniper 3.9. And so I just grabbed 4.8, waited a little bit. It never failed to fail. One MMRB off that PSAR, if you see it there. So that's my entry. Got another 2R battle drill there. Then it spiked up. If you have 2 positions on, you put on the half-hour trailing stop. So I got out, got another 4.75. Just kind of watched that for a while. Came back from lunch, saw that it had gone from, summer, fall, summer, above the PSAR is a rule that I try to teach. So I just bought it. Since I'm up already, 20R and almost 20R in 2 days, I'm just going to let it go till Monday because
Why not?
Reasons. Because why not? Plus, I wanted to show down what I'm also looking at while I'm deciding on what to do. The Williams indicator breaking the 50 with some significant acceleration is enough proof for me to hold that through till Monday. And that's that. I also posted one for Microsoft.
Yeah, there ain't a guy in the world that takes a look at the Rivian news and looks at that chart and says, "Oh no, we got to get out of that."
Yeah,
except me. I mean, because I can't
but
stand success.
But it's I'm holding 1R of
Out of
market's
20.
money.
Yeah,
out of 20. It's a crapshoot. But I got my trailing stop in.
It's a free lottery ticket.
Exactly.
Instead of buying a cheeseburger, you're holding a lottery ticket that may pay you.
Yep. And I've already made 20R in the last 2 days.
It's even healthier for you that way.
Yeah.
Yeah. So that ain't all bad.
I just loaded I loaded one for Microsoft. I don't know if you're doing everybody's charts, but
go ahead.
Yeah, 9.3 today. And then I did the same thing. I'm holding one. I made 9.3 on 3 positions. Yeah. That's the 0.3 stop.
Yeah, leave one on the table.
Yeah, because
for the dealer.
It's Microsoft.
For the dealer.
Yeah. Just one for the dealer. You're playing one for the dealer.
You don't even have to persuade me on that one.
I'm holding 8 Activision, Rivian, Tesla, Microsoft, and AI.
Yeah.
Over the weekend.
Yeah. That'll help you sleep.
Yeah. That's all I got.
All right. That's enough for today.
And there's my buddy just quietly crushing it, doing his thing.
Yep.
So proud of you, man.
Does a quick cut, quick re-entry, gets paid. 0.5
1.5R. He's well on his way to his 800%.
30 minutes. One target, one shot, one kill. Let's see here. Here's Brian. Now he's limited to just trading early in the morning and still working on pattern recognitions. He's doing some self-coaching in here. Too slow getting the OR3 on. There was an opportunity in here. He was looking at risk box off the top. I like that you didn't take it because this is not even a pattern. So that is correct. This one I think could have been done here instead of here. That would have probably scratched instead of losing 0.6. I like the short, and we should be out of that probably sooner. We might have even have made some money. There just wasn't any wiggle room on this one in DIA. It was all of the move was the gap up, and then just stabilized going into a long weekend, kind of a deal. Um, let's see. Uh, so this is Brazil. Yeah, that's an OR3 for sure. But let's remember this is a big gap up. We've got a right. We're well above the Red River. I like the short, but I think I'm out of it in the first bar. But you're out of it at less than an R. That should be a stop and reverse. That would get paid a little bit more. Um, I think you got out of this one just to help pay for the other one. It feels like an early exit. Yeah. Reasonable. That was a reasonable place to get back in. I do like the short after a nice big gap run up. Then people want to just and then people made money on the run up and then on this grind, and now maybe they want to reduce their exposure, so that short works. That short creates the opportunity for these guys to try to buy on dips, and then it just kind of peters out the whole day. So you're still at a comfortable level. This was actually higher than your previous average expectancy, so proficiency's coming. Here's Satya. There just wasn't much wiggle room in Tesla today, but there certainly was in Microsoft, where he brings home 3.7 on single position trades, gets it long and gets it short. I would say, your next stage is taking a look at the 2R battle drill would get you in here, and that would have probably gotten you out here, and that would have given you probably even an extra R and less time in the trade. I want you in the future buying this as a swing. Take one of those and just buy a swing with a wide stop way down here and just leave it alone. It's Microsoft, for crying out loud. Start buying permanent positions in that thing with markets money. And let's see. Let's get to the weekend charts. Got a little more time today. Bullish normal, massive goodness. This is so good that you can't even get any better. The only thing that was weak was that I think Latin America reduced the ETF2 exposure by a little bit. These are the holdings for August. If you're an ETF 13, it's Tech, Latin America, and the S&P. If you're an ETF 22, it's Tech, and discretionary, and the same thing for ETF 32. And that's because of the big three, Tesla, Amazon, and Home Depot. So we're going to just take a quick look at where our regression lines are. We're going to notice the Z3 pinch. This thing had a nice run up and then it scales into this. And there's your Z3 pinch. And there's your breakout from the Z3. So you put your stop in right here. Boom. That's how you do that. Here's your RL270, which used to be flat. This is the long-term buy and hold position, which is now at about 418. And then if we trace the line on the RL90, here's your RL90. And that thing is as good as can be. And that's tracking up here at about 435. So the longer term guys are pulling away. It got a little narrow right here, but this is where it got that second wind.
Yep.
And so the
looks like maybe a Kata 2 coming up too when that PSR flips back to up.
Yeah, and there's your RL30.
I'm speaking to you, Damien.
Yeah, there's your RL30. And then your RL10 is showing the COTA 2 and go. And this, if it breaks here, look back here. Where's the resistance? There's none until you get to 480, which is, or 478, which is all-time high. That's what success looks like. It's not without its tribulations.
Yeah. I'm
You know,
not telling them to do it. I'm just saying consider it. Do this one. Do a long term on paper, Damien.
there's your.
Like
This
if
was a big long winter, and then spring, summer, fall, summer. It briefly teased into the winter and rejected that and has done nothing but summer, fall, and now it's getting ready to go. This is going to get back into the summer again. It's going to be summer, a brief fall, and then summer. That's one scenario.
you know,
So where would your stop be?
for
Well,
me, 434.
well, here's the thing. You could, depending on your time horizon, you think it should stay above the PSAR because the PSAR is going to flip, and when it flips, the PSAR is going to flip to right there
Yep.
because math. That's the reversion to the mean. That's sort of the conservative stop. To me, this is an aggressive stop, conservative stop. That's a intraday trader's stop.
Yeah.
But it has to really stay above this.
But
That
Bill,
little, that's what that little hint looks like. Here, little Groundhog Day peeked up and said, nah, and gave you this move. So if this doesn't go, where's it going to go? It can come back to the Bollinger Band mean because this move is the same as that move, and the Bollinger Band mean, the reversion to the mean trade is right there. That's why we always want to know where that guy is. Here's the, that's that, that's your Bollinger Band. That's your 30 period simple moving average, and that thing should just keep going. And that would mean that the RL270 should keep going, and the RL, look where the RL90 crossed over the Bollinger Band mean. Now it's above the Bollinger Band mean. That's how good that is.
Did you have a question, Damien?
no, I have a comment or an observation. Yesterday, Thursday, at 11:24, there was a, if I recall correctly, a possible entry for a long, and I wrote it down on a piece of paper. And if I would have taken the trade, I would have had a 14 or 15R today. But the problem that I have is confidence for
Well,
overnight.
that's so reduce the risk. This is the signal you're talking about.
Yep.
This was
Yeah,
yeah, right around in here, probably like right here, right in here. So just put that risk on. That's a $3 risk. So double that.
So on the coaching side, Damien, I would say, okay, but don't feel bad about not taking that.
Oh, I'm not feeling
Good.
bad. I'm not feeling bad.
You
I'm just
recognize
saying
it.
that I need
Okay.
more confidence to be able to take those. That's all. That's all I'm saying.
No, you don't need more confidence. You need less anxiety. So
And
the
more
way
evidence.
the way you get less anxiety is to reduce the position size.
Okay.
And you just invest. Here's the maximum amount. It's like if this is your confidence,
Right.
and here's your average level of confidence about things in life. Well, let's just here's your. I don't ever want you acting because you feel this confident or that anti-confident. How about let's just get rid of that altogether? What does feeling confident have to do
With anything.
with the result of the trade? The only thing that matters is deciding what size position and how much to risk. So how much money to risk, I have production systems and I have scout systems. Right? And in my production systems, I have uh, full rate, and limited rate. So if I'm scouting, this is what I mean by one share. One share. So that you know what it feels like trading that thing. And if your full position is, I don't care, $100 a trade, mine's $400 a trade.
Yep.
Maybe your limited rate is a quarter of that or a third of that. So you just decide how much do I do. Well, you probably should be on the scout on that one if that's the first time you wanted to do it. So risk $1. Now we can look at this and say, all right, here's the PSAR flip, and it did not fail. So this is where I want to be. This is where the RL10 crossed the RL30. That's the beginning of the next trending move. So where could we put our risk boxes? Well, I want to hold this overnight, so this is where I'd hold it if it was intraday. And that's this whole thing. So maybe what I got to do is go back to the previous PSAR flip and say, this is where I want my overnight risk to be. So I just drop my risk box to this, and I say, well, my exit, the one that violates this swing is this one. So my risk is at 432, and my entry is at 437. So I'm risking $5. I'm risking $5 on a $437 symbol. So I'm just a little over 1% of risk, for the total share. So how big is what's the R10 in the S&P? Well, the range stat is $5.
Right.
How magical is that? So that's as much as you say, look, if this thing moves the maximum reasonable one-day move against me, then that swing trade ain't working. So that's a reasonable stop to put on. So risk a range stat for overnight risk as a standard normal. So if I was trading intraday,
so that
I
stock
would be here.
Moved just above one range stat today.
Yeah.
Right?
Yeah, well, with the gap.
Well, yeah.
Well, from here, it moved from here. It didn't even move a range stat. It moved from below the day
here.
Your
one position, add a range stat for your MMRB for the long position, Damien, even if you do that on paper. Because what we're trying to do is replace your beliefs
with math
and with math and evidence. So if you said, hey, okay, guys, Monday, if that PSAR flips, I got a kata 2 going on paper, I will say, okay, well, if I had put one position size on with a range stat box, and then measure out your, what is your reward to risk?
So if I'm risking 5, I have to say, is a move of plus 10 reasonable? Could this thing get to 445 in the next 5 days? So how do we figure that out? Well, let's just, since it's a swing trade, I'm going to get off the 30-minute chart, and I'm just going to go look at the daily.
Yeah.
And say, look, the reasonable upside target of this one is at least the peak here. And so you were entering right about there with a risk even like right there. If that's 1, 2, and 445 is certainly within reach. It was there in the that's just the test of the 10-day high. That is literally the auto framer. Literally the auto framer. Because we set the upper limit at the 10-day high, and we draw that line across, and we say, look, if it were to get to the 10-day high, we're not allowed to be surprised. We were not allowed to be surprised if it got to there.
Not at all.
Only with an entry here, it just got there in one day because of the gap and then a strong move up. So that
Right.
swing trade pays off in one day. That's a good day at work.
Yeah. So at the
Yeah.
end of the day, I'm just trying to replace your lack of confidence with evidence. And I want you to
And a
do the
process, yeah.
evidence.
I want you to
Yeah,
be
and that's
confident. I
yeah.
want you to be confident that you can apply a process to turn
Yeah.
this into a businessman's risk. And then you say, how much am I willing to risk on the position? Now, there's two ways I want you to distinguish between. There's the risk per share, and we just went through the math and we said for that hypothesis for the overnight risk, the appropriate one was to risk an adverse range stat, which means we think that it is we could manage the risk so that that only becomes 1 hour loss. And then we said there's two of those reasonably available above over the next 3 to 5 days. Yeah. So the risk per share, that is a reasonable risk. I don't need confidence in saying that's a reasonable risk. I've got math that says that's a reasonable risk. Now, the second one, though,
Exactly.
is you have to now draw the distinction between the amount of risk that's appropriate for the hypothesis to what your risk averse person is saying, and that is, now, of my portfolio, the money that I have in my bank, in my little warehouse, in my bank, which is going to feed my family, that's how much hay I have in the barn or whatever. All the work that I've ever done is putting money into there. Now, how much of that am I going to risk on this mathematical proposition? That's where you think you need confidence. I'm saying you don't need confidence. I'm saying you need to respect the inner voice that tells you what's the difference between fear and greed and a reasonable amount. And that's for you to decide. Is it $1? I don't know what the size of the portfolio is, but you say, look, is it $1? Is it $50 per trade? Is it, so now you have some kind of scale that says the minimum viable bet is $1 because that's skin in the game. I have $1 of skin in the game. And then you can say, I would say never exceed more than 1% of portfolio on any single trade. So that's sort of your between $1 and 1% of portfolio. Somewhere in here, you have a calibrated scale. And then at some point, you have a range of normal things that you can act without anxiety. But as soon as you violate that upper limit, you start saying, dude, I think you're being motivated. Your stomach is telling you, I think you're being motivated by greed and anxiety and fear of missing out. And you're talking yourself into taking trades, not based on the math, but and you're just hiding the emotions of greed behind some trivial math transformations, and we are not going to bet the farm on that. So those are two completely different managers. Your mathematician is going to evaluate the quality of the trade frame, independent of how many dollars at risk. That scientist doesn't give a crap about how much money you're putting. But your risk manager is in here. So you got to remember now, if we take a look at your histogram of confidence and emotions, at -1 over in here is the intuitive person that is worried about losing the farm. And then over here is the optimistic one who says, look at the opportunity and greed and all that. And if you've ever had an experience with that in your life, the person who's controlling the purse string says, yeah, I know that you have gambling tendencies. So every time I see any hint of you trying to push this thing up, I'm going to start getting nervous because I think I don't trust your numbers. You're just using the numbers to fool me. So you got to simply say, look, I have laid out a reasonable trade for you. Here's all the reasons why it complies with the trade frames. Here are the hundreds of case studies that we have used to validate that this is a legitimate template. I simply give this to you, and you tell me how much money you feel comfortable putting on there. And then I'll tell you, if you say it's $100 and this is the first time you ever traded that way, I'd say make it $20. Cut it by 80% and put 1/5 of it on there and trade $20. And now we said it was going to be a $5 per share risk. Go buy 4 shares of the S&P for $2,000 and hold that overnight, and then record the results, and then deprocess the entire mental and emotional and spiritual and professional experience of the first time ever trading that way. And that's why I would say instead of 4 shares, I just buy 1 share. Until you can do this routinely on 1 share, why would you try it on 2 shares? Because you don't even have any evidence you can do it on 1 share until you do it on 1 share. So do it on 1 share. And if you do it, you tell me how many times you got to trade 1 share successfully and professionally, not winning every time, but framing it and managing it and exiting it and assessing it professionally. And then you tell me when you're ready to move from 1 share to 2 or to 4 to 5, or increasing the dollars at risk per trade. If you buy 1 share and there's $5 at risk, you're risking $5. What's a cup of coffee cost? So stop drinking coffee, drink electrolyte water with no sugar, and investigate the difference in your health of making that shift. That's a good trade.
Yes, it is.
End of
I
rant.
agree.
End of rant.
Thank you so much.
So Damien, I've done the same thing with my father-in-law. Right now he's up 1, 2, 3, 4, 5, 6. Because he loves the reversion to the mean trade. He loves buying on dips. So he bought American Airlines back in end of May. And he just called me last week because he was up $2 a share. And he goes, "Hey, what do I need to, this," because it started like 2 days ago, it started to flutter a little bit. And I said, no, don't give up on it now. It's just breaking out of the Red River. I said, put a 65-cent stop on it. So now he's, now it just broke through another kata or another 2-hour battle drill, and he's just going. Same thing with his favorite, which is Ford. If you take a look at Ford back in end of May till now, it's crazy, and it's a 50-cent risk box. It's not something we normally follow, but I follow it for him. And whenever he starts seeing a little downtrend, like at the end of June, I got to talk him off the edge. Say, if you want to get out, but get ready to get back in, because it's probably going to keep going. So,
Yep.
Same thing. So you're not alone. You're asking the right questions, and you're following the right mantra, dude. You're doing it. So proud. That's all I got.
Thank you, Ken. Thank you,
So
Bill.
you got to unpack all those tangled beliefs and say, look, I'm going to use evidence to inform my actions. I'm going to use proper risk management that respects my cautious, concerned nature, and create a wedge so that I don't backslide. And then I'm going to use that evidence for those actions, and then that's going to give me updated beliefs because of evidence and action. And then the wedge is the discipline that keeps me from going off the deep end. That the better I do, I don't want to just go, hey, look how much better I am going up the hill, because then if I blow it here, the fall is even more painful.
Yep.
That's the Icarus problem. Flying too close to the sun.
Yep.
We're not
Mr.
going to have that. We're not going to have that, because we're locking in protection all the way up, and that's what the wedge and the mountain climbing thing is.
That's what
And-
my dad would say about the cog engine that took coal up the hill. You know, it would only go back one tooth. You know, you're filling that thing with coal and you have to have it crank up using a gear, but it would only, you know,
The
it
ratchet.
only click back once.
Yep.
So the important thing here too, guys, is I know we're beating on Damien a little bit, but he can take it because we've talked with him
We're not
before.
beating on him, we're just training.
Yeah. I'm just saying you got to do this though. I mean, you actually have to write down your feelings and how you're doing so you can say, well, it is not that we don't feel, it's just that we are in control of those feelings. I want you to be excited, but in a controlled way. I want you to be a little nervous because otherwise you're not engaged. But you must master those things to do this successfully. Journaling and recording your feelings as you're trading is immeasurably important. Please, if you haven't done that, start doing it. End of rant.
All right, so
But
here's the walking man and the 5 ways of knowing. There's the rational mind in your head. There is the knowledge of your vision in your heart. There is the little nervous in the service guy in your gut. This little guy in your gut says, look, this is my emotional center. This is my spiritual identity center that is concerned about where I want to get to at the end state. And this rational guy in my head is the one that is simply trying to come up with these mathematical possibilities with numbers and factors and all that other stuff, and giving me reasonable moves. Now, the knowledge of my hands is what it takes as a craftsman to frame these trades. And then to be able to do them repetitively is the knowledge of the feet going forward. The guy that I am most concerned about is this guy here, the knowledge of my gut. Because the purpose of the head is to see potential on how to get to those different, and that's where my planning and strategy and training and it is all due. All these pathways that I can walk, they're going to get me to the end state that my heart is telling me is proper. This guy is my visionary and my dream state. This is the guy that's given me practical plans and strategies to get there. So they're thinking about that. Hey, there's tigers out here, and holes, and canyons, and earthquakes, and weather, and sharks, and bandits.
And
And
boulders
while-
under
and-
the water.
And while we're doing all this stuff, there's all these things that are coming in to try to trip us up and all that. And that's what this guy's job is. He's saying, look I've seen when you've been wrong and you changed your mind and when you took shortcuts and you were thinking you were rational, but you were really emotional and weren't being completely honest, or we're not skilled. So those are internally generated risks. And I'm also worried about these things that can come in and get me out in here. So he's worried about how to maintain this little safety perimeter so that we don't fall off the edge of the cliff out to the limits of his ability to identify risks. So when you're talking about, is the trade reasonable? Trade. Is it reasonable? You ask your head and your hands, because this is the one that sees the plan and your hands are the ones that can put it into action. And then you ask your feet, you say, can we keep taking all of those steps? Can we do that 1,000 times? And learn how to be endurant? Yeah, that's fine. And yeah, it's consistent with my heart. Now, the only guy left is the knowledge of the gut, the fearful one. Hey, that's not a bad thing. That fear is what keeps you from going off the deep end like a lemming. So what we got to say is, you tell me, risk manager, how much risk can we put on this trade so that you are satisfied that we're not going to go off the deep end? And if the scale starts at $1 and it goes up to, I'm just telling you, not more than 1% of portfolio.
Ever.
Yeah, if you do beyond that, then you are
You're on
on
your
your
own.
own. You know, good. Best wishes.
You're a
But
gunslinger.
one of the things that I'm going to say, because I have a pretty large portfolio, I will never even go close to 1%. Maybe I'll do 1% of the little account that I'm dealing, trading on a day basis. But I don't feel confident dealing with 1% of my portfolio, which is about $50,000 or $60,000 a trade. Not going to happen. I'm not going to do it.
That's nuts.
So
Don't do that.
And so I'm not going to do it.
So now your meta system is this: it's insurance and real estate and business, and then there's your core. That is, stocks, bonds, business, real estate. And then just inside this one in stocks, it's core, swing, and tactical. So the size of those buckets matter. Now, so the money that you have inside the tactical trading, whatever that number is, 1% of that is still the maximum. So there's a number between 1 and the absolute upper limit that will never be breached. And you don't start here and then fade back into here. You start with, I proved with evidence that I can frame these trades with my head and manage them with my hands and do it 1,000 times with my feet, all in support of my heart, and I can walk that path without falling down. Now, and only now, is my risk manager, my gut check, starting to feel okay. And then that guy is the one who allows you to ratchet that up to whatever level that trade needs to be. And so to me, it's $1, and then $5, and then $10, and then $20, and then $25, and then $50. Up too much. Go back to $40. Now $50. Now $75. Now $100. And after 25 years, I've gone from 1 to 400. I don't even care what percentage of the portfolio that is, because I know I'm not close to 1%.
Right.
But I don't care about what anybody else thinks. I absolutely don't care about what anybody else thinks. I have enough on my plate. You do what you want to do if you're in the sound of my voice. You can talk, well, yeah, here's what I would do if I was you. I can't even hear you when you say that.
You're not me.
I don't care what you would do if you were me. I'm only interested in how can I help you decide what you're going to do if you would do it. What would you do if you were you? That's where I can maybe provide some help. I can only,
it's a really important point in the foundations when Ken talks about that. He's like, well, what do you think that you can risk? Well, take 20% of that. If you're not going to do, maybe your ego doesn't let you trade $1, that's fine, whatever. But
the only thing that I can say from evidence is over the last 6 or 7 weeks, I've been doing one share, and I am so at ease that I can take rational decisions, and that's the reason why I'm having anywhere between 1 and 3 hours a day, because I'm at a very comfortable level. And when I have 100, 200, or whatever it is that I decide trades into my belt, then we increase to 2 shares or maybe 5 shares. We'll decide at that time. But first of all, like Ken always says, I have to build a foundation.
Yeah.
Once the foundation is solid, then we can build on. Otherwise,
Remember,
one of your
every
quicksand.
one
your
of these
realistic-
trades, every one of these trades is one of the next 1,000 trades. So the knowledge that you get by the accumulation of positive evidence, that's the knowledge of your feet. So we talk about hands, head, heart, gut, hands, and feet. The knowledge of your feet is the knowledge that you get by accumulating all of these repetitions. Because when you're doing conscious competence, you're using your head, framing it to get the idea, framing it with and managing it with your hands, and then satisfying your gut that everything's okay, and then you're taking step after step, and then you have to learn to do that disciplined each time. That's the knowledge of your feet. So if you're out there road marching or running and you're not watching where you're putting your feet because you haven't fallen down for a while, you miss the hole. You step in a trap. So there are things that you learn only by doing lots of repetitions. And that's where you get the unconscious competence that rounds out the 5 ways of knowing of the walking man. And you got to have all of that. That's the evidence. If you give me the evidence, you keep your beliefs. I don't need the beliefs at all. I believe in evidence. And I do that cautiously because when I've been accumulating this evidence over time and we're out here, I wonder how, and I have all this evidence back here, is that evidence still good? Or has the market changed and gone in this direction, and now this evidence isn't any good? That's why I'm constantly revising and updating and evolving and adapting.
So
Just because it
Damien,
was true once doesn't mean it's still true. It has a shelf life.
When you do feel that, you're going to be marching and marching and marching and doing the, 0.7, 1 R, 1.5, and you're going to be doing that. Then one day you're going to go, hey, wait a minute. I don't see the evidence of why I should get out of this trade, but something is telling me to get out of this trade. Do it. Then take a step back and look at the evidence and go, oh, wow. That's when the market has changed, because you're like, oh, I've been marching along here for 20 miles, and all of a sudden now there's stones in the road. What is right? It hasn't caused you to trip yet, but there's new data. Could be.
Well, you see, that's what happened this morning, and I had a couple of them this week on trades that I was able to cut for about half an hour loss. Is because now I'm able to see that the pattern is no longer there, or there's a reversal. And both of you have trained me that if I get out, I can always get back in. So if I get out at 10:01 and 10:02, the PSAR flips again, I can always get back in.
Yeah.
But if for one reason or the other the market goes against me, all I lost is half an hour. I haven't lost 10 hours or 20 hours like I've done in the past. So
to the other
that
8 guys that are here, that's huge. That's a huge insight that you've just given them. Huge. To say, I can always get back in.
Right. I'd rather be on the outside wishing I was
in
than on the inside wishing I was out. Let me talk about intuition now. I want you to remember that there's a part of the market that you can see, and your beliefs and your procedures give you a representation of the market that you choose. So you choose what you put on your screens. So you have a vision of things in the market according to the lens that you put on to look at it. But there is also stuff happening in the market that is complex and chaotic that you can't even see. And then based on what you see, these facts, you've got you use a set of simplifying assumptions to create a simpler, manageable model of that portion of the market you can see. And from that, you put together rules that allow you to make trade frames and then manage trades. Look at how many layers of simplifying assumptions are going on into this. And so if you did 100 trades and everything went fine, you could get a certain amount of complacency because you now think, oh, I actually know what's going on in the market because look, I got 100 trades that worked out pretty well. Whereas that is such a tiny little drop in the bucket in that great vast market, there could be a whole storm coming in and everything changes that is just waiting to overwhelm that set of rules. So that's why when you're marching along and you start seeing anomalies and some of all the other things, you got to remember that on this path that you're walking, your protections keep you from falling off the deep end in either direction. The deep end of too much optimism or the deep end of too much pessimism. So there's a provisional path that we're creating as we go. And we want to continuously be updating our rules, but never losing sight of our vision. So the guy that takes care of that for us is we specialize the knowledge of our gut to be fearful. I want you jumping at shadows and worrying about things before we can name them. Because I know that there's things lurking out here who can be on me before I can fully appreciate their danger. So I want you to be especially nervous because my rules are going to take care of us if that danger doesn't come true. And we're going to continue to make bank. But our ironclad rules about 1R and whatnot, sponsored by your gut check. So the rules of your never take more than 1R is your rational mind helping. And then the limit of how much you put on any one trade is where your gut check is helping you. And then your rule about saying my total portfolio heat, like if every single open trade I have wrong, which is the accumulated risk of every open trade. Remember, every open trade you put on, you had a little gut check and decided how much I was going to put into that. And then you had another trade and you did a gut check and said how much I put into there. If you're not careful, you start taking on a bunch of these risks. And now you want to be concerned about your overall portfolio heat. And that's a mathematical computation. Say, I'm never going to exceed more than 20%. And I'm never going to exceed more than 1% on a trade and never more than 20% of total portfolio heat. And now you are using risk management with both your head, your hands, your gut, and your feet. And when all four of those things are contributing to risk management, you have a fighting chance to achieve the end state that your heart is telling you is your proper and appropriate mission, which gives you the courage and the energy to keep going and to push on through fear in an appropriate professional manner. That's what you do. That's why the walking man, the 5 ways of knowing, is so vitally important. You know how important that is compared to the particular trade frame? I can describe to you the kata 2 inside of that box. It looks like this: 2 higher lows, and it crosses the dragon. There it is, kata 2. And don't take more than a 1R loss. As 2 higher lows, and get your loss to no lose plus dinner for 2 quick. Done. What's important in the foundations course? The walking man. The 5 ways of knowing. And having the knowledge of your gut protecting you on the path that you would travel with your feet. So while you're getting all that positive evidence and all that, the fearful voice is your gift. It's the gift to you from all of the people in your past who ever got murdered or watched somebody getting murdered or eaten by tigers, and embedded in your DNA, which says it's a dangerous world. I don't care what they show on TV or what some guy that's never been bitten says. You don't got to worry about that. Really? Go ahead. Enjoy your life. You let me worry about me. So the knowledge of your gut is the embedded tribal wisdom of all the things that had ever gone wrong, but which we were able to survive. And so the things you're worried about are the legacy of the things that all your ancestors survived. Guess who's not here to tell you about the things your ancestors didn't experience? All the people who got murdered and didn't reproduce. So there's always a tiger out there stalking you. That's the apex predator. We are not at the top of the food chain. So, that's everything I wanted to say. Let's get this on the can and get ready for tomorrow. True story time.
You
in the morning.
can. Thank you, Bill.
Thanks,
We
Damien.
appreciate it.
Thanks, Damien, for sharing. It is your.
Thanks for hanging in there.
Yeah,
That's-
you inspired this discussion.
Hey, Damien.
Thank
You did what you're supposed to do. I mean, my brother likes to give. He's an emotional. guy. You did what you're supposed to do. You come to practice and you work. All we did was just do the work. There was not anything special or magical about that. That's just going to work, okay? That's all that was. That was not even amazing. That's just doing the work.
Professional work.
And you see, one of the things that I will say is I got the aha moment over the last 4 or 5 weeks. Trading is a professional profession. Amateurs are not meant to be there. And that was an aha moment right there too.
Yeah.
Is you have to take this like if you were a doctor or if you were a lawyer or whatever it is, because if you don't, you can be in trouble. And I will leave it at that because we could talk on this all night.
Yeah.
Or even on
Amateurs
weekend.
Amateurs practice till they get it right. Professionals practice till they can't get it wrong. That's what you're doing.
You just compare those two lists, and then you decide where you want to be. Who's going to be here in 30 years?
I am.
Damien. Yeah. Well, you're doing the work, and you're sharing it.
That's what you're supposed to.
That's
do.
what you're supposed to do.
Yeah.
All right. Ciao for now.
Yep.
Have a
Thanks.
great weekend,
Ciao.
everybody.
See you,
Have
fellas.
a weekend. Take
Yep.
care. Bye-bye.
Bye.